Hey everybody, this is James with WSTrades.com. I want to talk about trading with Bollinger Bands and how you can use them to help you make higher quality trades. So what are Bollinger Bands and how are they made up? Well, in the middle you have a 20-day moving average. On the top end you will have a line that represents two standard deviations above the 20-day moving average, and then on the bottom you will have a line that represents two standard deviations below the 20-day moving average. What is standard deviation? The standard deviation is a statistic that measures the dispersion of a data set relative to its mean and is calculated as the square root of the variance. The standard deviation is calculated as the square root of variance by determining each data point's deviation relative to the mean. So this will help you to understand how far away from the mean or average that you actually are. So let's hop into Thinkorswim here and actually see how to plot the Bollinger Bands on your chart. So right now I don't have anything on my chart but the candlestick. So in the upper right, I'm going to click on Studies. I'm going to click on Edit Studies. And then there is a little search box in the upper left of this window. I'm going to type in Bollinger there and it appears. So I can double click that. I can click Apply and then I can click OK. So now I have the Bollinger Bands plotted on the chart. So let's talk about what we are seeing on the chart here. So in the middle, you've got that light blue line. That is your 20-day moving average. It's a simple moving average by default here in Thinkorswim. On the top end, you have a red line, and that is your two standard deviations to the top end. And then on the bottom, you have this purple line. That is your two standard deviations below that 20-day moving average. So there are your lines, and essentially what this does by default, it throws up your two standard deviations above and below the 20-day moving average here, and that's essentially going to capture 95% of the price move of the stock or the ETF or whatever you're looking at here. And you can really see that dictated here on the chart. Most of the time, the price is going to be in between the red line and the purple line. You have a few moves outside of that, but you can see that about 95% of the time it is trading within the red line on top and the purple line on the bottom. So how can you actually use these Bollinger Bands to help you make better trades? Well, if you rise up here to the top end, or you're starting to test this two standard deviations to the top side, and it even goes outside of that and goes above that line, you know it's probably not going to sit there for long, just because you know 95% of the time the price is going to be contained between the two standard deviation red line here and the two standard deviation purple line to the bottom. So you know if it rips outside of that, it's probably not going to hang out there long. So you can use that for a short trading opportunity. And this candle right here is a perfect example here. I've got SPY, or the S&P 500 ETF, on the chart here. This is the daily time frame, and you can see on this day it was really just ripping up and riding that two standard deviations above the 20-day moving average here, and it broke out and actually closed well above that line, but it did not last long. The next day there was a massive sell-off and a huge move down. So you can see that when it breaks up to this line, or even breaks above this two standard deviations above the 20-day moving average, that you have a good short opportunity there. And it made a big drawdown. If you saw this candle outside of here, and let's just say you went short on this candle, like where it closed at 357, this thing moved all the way down to about 319, 318. So you could have had a nice trade right there if you went short here, and then you started to sell when it started to get outside the range here, or really started to test this two standard deviations to the downside. And then on the reverse, you know, you can spot good long entries. When this thing is hanging out down here, you see this candle right here going well outside of two standard deviations below that 20-day EMA. So that kind of tells you the market might be ready to reverse, and that's exactly what it did. If you traded off of this candle here at the close of it, or even when it was trading even lower, let's just say you grabbed it right here at 321 and you're just taking a gamble that, hey, this thing's probably going to reverse pretty soon, you could have made a huge profit, because this candle touched all the way down to $321 and then ripped hard all the way up to 353. So that was a big swing there as well. So that's kind of how you can use it to go long or go short. I would say though that it can be a little risky sometimes. When the market is in an uptrend overall, which this chunk of the SPY chart is in an uptrend overall for sure. We had some pretty big dips and some pretty big pullbacks here, but overall we are uptrending here. So you might run into some trouble when you're trying to make a short entry trade when the market is in an uptrend. I would say it's safer and you're going to have high quality trades if you trade with the flow of the market. So if the market is in an uptrend or SPY is in an uptrend, you probably want to be looking for buy opportunities rather than short opportunities. Now, it's not to say that they don't exist, but you're probably going to have better success by going with the flow of the market. So you would be buying when the purple line down here or the 2 standard deviations below this moving average are being tested, or it goes outside of that, you would be looking to buy at that point. And then this thing rallies up and then you can take profit. Maybe when it gets up here to this top band, you can definitely see that's something you could have done here on SPY. And this candle right here is a perfect example of why you want to go with the flow of the market. Because let's just say you saw this thing rip up pretty hard here and you're like, wow, this thing is trading, above 2 standard deviations. And let's just say you traded on the close of the candle right here and you just thought that the market was going to reverse. Well, it continued to rip higher from this point. I mean, even if you went short up here at 364, the market dipped a little bit, but rallied back quickly and continued to rip higher. So that's a great example there of why you want to trade with the flow of the market and don't try to go against the market and what it is doing. Another thing you can do is use this moving average here in the middle. Sometimes it will reject that nicely. So let's take a look here. Here's a good example of it. You have this candle here touching and actually closing right at that 2 standard deviations above this 20-day moving average. So you could have went short there, and then the thing started to pull back, started to die off, and when it actually touched this moving average here in the middle, this light blue line, if you started to see rejection, you could get out. You could think that it's maybe going to bounce at that point, and that's what happened. It rejected that level and it started to move higher. So you can definitely use this moving average in the middle, and also you can use your 2 standard deviations to the top side and also your 2 standard deviations to the downside here to help you make better trades. I would like to go to a different ticker here to show you another way the Bollinger Bands can kind of help you out, and this is when they start to contract. So you'll see when big moves are happening, you have this big wide amount of space like right here. This is ticker FSR or Fisker. Started going an insane rip here, and all of a sudden, these bands are really, really wide. So you'll see that really opening up when markets get volatile, but when markets kind of calm down, it may alert you to a possible breakout in the market. And I want to go to this chunk of the chart right here because this is a great example. Fisker went on a pretty good rip here. It was trading down around $8 and it ripped all the way up to about 24. So big swing there. These bands opened up really wide, but then it kind of settled down. You can see as it treks along here, the Bollinger Bands are getting tighter and tighter. So they're really wide. Price action starts to trade within a tight range. Bollinger Bands become very tight. This can definitely be a sign that we're heading for a breakout. It's not going to tell you right away if it's going to be to the upside or the downside, but just really keep an eye when the Bollinger Bands are tightening up. Typically, it means that a big move is coming in the near future. And if we scroll to the right here a little bit, you can see this crazy move starts to happen. So Bollinger Bands get really tight here. It's really trading within a tight range, and then it makes a crazy breakout to the upside here. Has a really hard pullback, but it actually rejected, let me bring this to the middle of the screen. It actually rejected this 20-day moving average right here in the middle perfectly. So it's really tight range, big breakout to the upside, hard sell-off, and it rejected perfectly off of this 20-day moving average here, and it just blasted off all the way up to $32. So that's another way the Bollinger Bands can really signal that the market could be ready to make a big breakout, or the stock could be ready to make a big breakout. You can see here how this was testing and just blowing through the 2 standard deviations to the top side like crazy. So when you see this kind of insane price action here, several candles here on the daily trading outside of 2 standard deviations, it's a pretty safe bet that this thing is going to come down. And we had a massive sell-off. So this thing was at $32. And it almost gave up all the gains all the way down here to about $11 or $12. So if you thought any of the information in this video was useful, please like this video. Please also subscribe to the channel if you're not subscribed. Hit that notification bell. Appreciate you for taking the time to watch this. Talk to you soon.